Welcome back for another episode of Strive for 25. Joel Farrell here, and looking forward to sharing with you our guest today.
To another episode with the Strive for 25 podcast. Joel Farrell here, and I've got another amazing guest. And this one, actually not too far away from me, but Drew McCluskey. And I'll let Drew introduce himself and explain kind of what he's into.
Yeah, thanks so much. Thanks for having me on. So my name is Drew McCluskey. I'm from Central Missouri, Rolla area. It's about an hour and a half outside of St. Louis. I've kind of gotten into a bit of an array of things, but I'm a real estate investor and then also a co-founder of Bright Investor, which is a real estate data mapping platform for visualizing real estate data.
Okay, so let's dig into that real quick. So mapping out visual data for real estate investors, right? And this thing is coming around the corner very, very soon. So what's the name of the company again?
Yeah, so the company name is Bright Investor. And yeah, it's releasing in March here. Towards the end of March, it'll be releasing. We're kind of right now in the beta testing phase of it all.
Okay. And so if I'm a real estate investor, what is this product going to be giving me access to that I don't already have?
Yeah. So the biggest thing that this software does is it helps to take the data when it comes to market research. So if you're trying to figure out where you want to go in a market, or if a property gets thrown across your plate and you're not familiar with that area, it basically incorporates a lot of data from the different providers that you're already used to. So people like Rentometer, Crimeometer, the Census Bureau, labor statistics, all of those different sources, puts it all onto one platform and lets you visualize all of that data across the different properties that you're looking at. So if you've got a bunch of lead lists from Deal Machine or PropStream or something like that, it lets you see those compared against all these other softwares that you already use visually, and just stacking the layers just basically helps to narrow down and understand quickly what's going on directly around that property.
Okay. Because I want to kind of dig into this just for a second and then start to rewind the clock a little bit and dig deeper on some other stuff. But I think in our conversations, this is going to be released and the average person is going to have access to this on like a subscription basis type of thing.
Yep. Yeah, no, the basic model, there's a free tier that kind of gives you access to data like schools, population, and businesses around. But then, there's a standard version that starts off at $50 a month. And then the eventual, like the nationwide data with all of the different custom data features and everything is $100 a month.
Okay. So I mean, the barrier to entry on that as just a regular layperson is not terribly high. So that's pretty cool.
Yeah, definitely wanted to make it accessible to where instead of having to go to 8 different data providers for each different element, kind of reducing the cost like crazy. So definitely saves a lot of money if you're trying to get into market research.
Cool. So gonna start to unpeel the onion here, so to speak. So at what point in time, I mean, we're at the beginning of 2023, which is crazy to say.
Yeah.
But when did this business opportunity or idea find its creation?
Yeah, so it pretty much started, I think this was back in 2021, like the very beginning. So rewinding a little bit back about me, I grew up in the middle of nowhere in Rolla, Missouri, and then I ended up getting an internship with Brandon Turner from Bigger Pockets. It was kind of just out of the blue situation. A lot of different networking went into that, but anyhow, I found myself out on Maui working with him, and I was talking to him about my background in tech and kind of my understanding of computer programming and software. But now how I've shifted and I just want to go all in on real estate now because that's just I caught the bug. And so we were talking, and he said, you know what we really need that just hasn't really been touched fully is real estate market visualization. That's just something people are doing in specific niches, but they're not just giving an all-in-one tool that's accessible to smaller time investors. So it really started back in 2021. I began running some mocks and whatnot. But then it took off more back here at the beginning of 2022, where I partnered up with another guy up in St. Louis, Donato Callahan. He works as a data analyst for the Department of Defense. And he also had this same idea, and he was like, oh, we have to do something together. So we pretty much took it off from there, and it's been in development now for just a little over a year.
Cool. So for those out there that aren't that familiar with Bigger Pockets or Brandon Turner, you mentioned Maui, jealous. Okay. Well, can you explain a little bit more about him and kind of what he's all into?
Yeah. No, so Brandon Turner, he's pretty much how I got into real estate in the first place. He's one of the largest real estate influencers. He was the head of the Bigger Pockets podcast and kind of came in early on when Bigger Pockets, the platform, launched. It's the largest just real estate education portal where they provide a lot of free opportunities for learning through podcasts, webinars, but then they also have books and different groups that you can be a part of as well through paid mentorship groups and whatnot like that. So I met him through just some of the different conferences, DMing on Instagram, all those kind of things. But yeah, that's where I met him from. Was just I saw him on some podcasts and some webinars, and eventually just began reaching out and formed a relationship there.
I mean, was it one of those things where, if you're reaching out on IG like 100 times, like 7 times, like in the comments, like just being in that circle, being in that in the conversation, how long of a time frame was it to catch that conversation?
Yeah, it was. I'm trying to think. Like it was probably overall, over 100 different interactions of commenting on different posts, sharing them, liking them, DMing him responses to his stories. But I think the primary element that came in where I actually got direct connection to him was when they announced one of their conference events. And I direct messaged him and said, "Hey, I know this place that you're going to for the conference. If you've never been there, it's a zoo to get through. It's just a huge conference center. I'm familiar. If you need any help, I would be absolutely happy to just be your runner boy because I know all the shortcuts throughout the conference." So he responded to that one and got me in contact with some other people who were helping to run the event as well. So overall probably was around 100 plus attempts of reaching out through different ways.
That is awesome.
Yeah.
And that was in what year was that? 21, 20?
That was 2019.
2019. And
Yep.
What area was that? What state was that conference in?
That was down in Nashville, Tennessee. So I grew up going to conferences down there with my parents and such. So I just, as a kid, this was the Opryland Hotel down there, which is basically, it's 4 lobbies large. And it's basically just a massive jungle. Like they've put plants everywhere, waterfalls, everything. So it's quite literally like exploring through to get through the lobby to get to where you need to go. It's quite a maze.
That's awesome. So, I mean, 100 times, 100, like, so you had your mind set on this to say, this is an opportunity that I don't want to pass up. This is the person that I think could help, build some connections. And so,
yeah, I'd say it's something that I'm planting seeds on all the time. So it's not like I was just going after Brandon. I comment on pretty much every single post I can that looks like something worth, if I like what someone's doing, I'm commenting on it, I'm supporting it, I'm sharing it. I basically just really wanted to provide value, make my name out there, see what connections and networking I could get. Because again, I came from a place where there really wasn't much network at all out here.
Yeah. So what job in that 2019 timeframe, what job were you doing at that point in time?
So at that point, I was still in college. I would do random website development for people. I would do graphic design, just odd and end jobs here that kind of make extra money. But at that point, I was just a full-time student. And so
were you in Rolla area or somewhere else?
Yeah, I was in Rolla. I did online school with Liberty University. Yeah.
Cool. That's awesome.
Mm-hmm.
Yeah, because University of Missouri Rolla is a big engineering school. So I just didn't want to assume.
Yeah.
But
yep. No, engineering is not quite my suit. So yeah, did online school instead.
So the whole real estate part of the game, what was your first foot into the game in terms of real estate?
Yeah, in terms of actual real estate, I very first kind of caught a little bit of the bug of it during college. I took a real estate law class that just kind of described how the transfer of property and everything goes on with that. And that spurred me into researching it, which is why I found Bigger Pockets. I watched probably 2 webinars and read like 1 or maybe 2 books. And then I basically just looked for the first property I could get my hands on. So I definitely am a jump and try to build the parachute on the way down. However, that doesn't always work out. Sometimes you end up hitting the ground before you build the parachute, which is more so what happened in my case. So the first property that I got involved with was one that my dad was purchasing because he needed the parking lot. And it was on the courthouse steps. It'd been part of a whole foreclosure deal of about 30 other properties. But on that parking lot also was a very, very poor condition fourplex unit. So he bought the property for the quadplex, and he said, "Hey, I bought this property. I'm not going to do anything with the quadplex. If you want, you can go ahead and start, breaking it apart, renovating it. And if once you've gotten it down to bare bones, you like what you're seeing, you can go ahead and buy it from me." So that's pretty much how I jumped into my first one. I definitely had a lot of cushion there in that regard. If I didn't have to actually purchase the property yet, it was just paying for all the demolition costs, hauling trash away and such.
Cool.
Yeah.
How did you buy it? Did you buy it as an investor or buy it like a renovation loan, FHA? Like, how did you purchase it?
Yeah. Well, so with the purchase again, my dad purchased the lot with the property on it. I ended up not purchasing it because once I did get it completely down to studs, this is probably about 8 months of demoing. It was the whole, like landlord special where they've added multiple layers of sheetrock on everything. They've put 3 layers of floor and everything. So just once I actually finally finished demolishing this quadplex about 8 months later, I came to the realization that there was way more rot in all of the foundation, way more shifting of everything, that it really wasn't within any of my budget to jump into, especially with my lack of expertise. Again, like having only really watched like 2 webinars and maybe read 2 books. So yeah, kind of big slap in the face of there's a lot to learn here that you don't know about yet.
Cool. Mm-hmm. So, do you want to jump into what was your next experience?
Yeah. So the next experience, this was post working with Brandon then. So I finished out that. I ended up getting an internship with Brandon to help him with flipping out on Maui. Gained some experience, really grew my network a ton. But then I came back and I knew I wanted to start off with house hacking because I knew I needed to minimize my expenses as much as possible. I was going to be, living away from home now at this point. So I pretty much, I set a goal with my brother, that, okay, before I come back from Maui, I need to have a property under contract ready for me to move into because I don't want to move back home. I just want to keep, the level of independence kind of that I've got currently. So we set some goals that I had to pay him $100 if I didn't analyze 50 properties by the end of the week. So I analyzed 50 properties and we finished that goal. And he was like, all right, now another $100 if you don't submit an offer on a property within the next week. Just submit an offer. You can always back out of it, but if you don't submit an offer, you owe me $100. So I went through that. I submitted an offer on the best looking one that I could see so far. And I was doing this all just long distance. And eventually, my brother, then he was still in Raleigh at the time. He went ahead and walked through the property and said, this looks like a great one for a starter. So I went ahead and submitted the offer. It got accepted. And I think it was the week that I came back home from Maui. Then we were sitting there at the closing table, getting the property for that. So that was a 3-bedroom, 2-bath home. And then I rented out by the rooms, kind of house hack. So just renting out the 2 other rooms. And that ended up covering the mortgage for everything.
So I know when I bought my first house, it was a condo in Brentwood here in St. Louis in 2009. In my world, I'm in 100% commission job, doing mortgages. And so I was always fearful of really kind of taking too many steps because what if something happens to my job? So when I got that contract accepted from a builder, that was a no shit moment for me. Like, oh my God, now what? Do I really want to do this?
Yeah.
But was your experience different at that point in time based on your Maui background?
I think it definitely helped knowing that I now had some people in my corner and that I'd done a whole lot more, listening to podcasts and reading. Like I felt like I had a bit of a backup plan going into it. So I just knew, okay, I already submitted an offer that was below asking. So I've got a bit of cushion there if I need to sell it. My other view was, if worst comes to worst, if no one wants to rent from me or it's horrible to rent to other people, then I'll just keep living in the house. So it ultimately wasn't a horrible deal. I've lived most of my life kind of doing by commission random jobs, just, on and off websites, graphics. So I've always just learned that it's kind of, okay, if you need more money that month, just go out and find another random thing to do, whether that's helping someone haul garbage or painting someone's house. I have enough of a connection to my community that there's typically always something I can do to trade my time for money. So ultimately, I just felt like, okay, well, if this goes sour, I'll just need to work more hours, which at the time being single definitely was a lot easier of a risk to take, right. I think at that point. Yeah.
So you get the first one, right? Mm-hmm. And then, and that was in, what year was that? 2020?
That was the beginning of 2021.
Okay. So the internship is done. You're on your way
Mhm.
back to the mainland, and then like from that point into a tech job or a computer job.
So I actually, right off of coming from Maui, I connected with investor girl Brittany Arneson while I was out there, and she was beginning her syndication company for commercial real estate, and she needed website marketing, graphics, kind of a systems manager, just to kind of help her get launched off the ground. So I talked with her for a fair amount and said, "Hey, okay, what if I did, for the first month I worked for free, the next month I'll work for $500 and we can talk about it from there on out." I wanted to stay connected to the different, investors in the area. And I had a bit of savings at that point, maybe like $6,000 or something. So I was like, okay, I can live off of this for a while and hold it. But just let me work with you because I want to get experience in this area. And I know I can definitely help you get off the ground. So I worked with her for I think maybe 6 months, helped her get all that launched. Jumped around to a couple other just random graphic commission jobs. But yeah, no, it's pretty much always just been jumping around to different opportunities as they come. Overall, cost of living in Raleigh is very low. Like I need about $1,800 a month to live, so it's really
Right.
it's not too hard to make that.
That first loan for you, I mean, was
Mhm.
it an investor like a DSCR loan, or was it a primary residence loan?
So it was a standard, just conventional loan. I was able to get it. I asked for it to be in house with the bank out here. I used Town and Country, which is one that's around Raleigh or around Missouri. I'm not sure how much it is in other states. But yeah, I talked to them. I said, okay, what could we do if I keep it in house? I pay a bit more on the interest rate. Can you do things on the down payment? Can we do things on me not having to live in it and whatnot? And so ultimately they agreed. They said, yeah, okay, we could do a 10% down, and we can do non-owner occupied. And then towards the end, they were even willing to just waive the private mortgage insurance as well. So it really turned out to be a good deal. But that was also, I'd probably talked to 10 or more banks at that point that were local banks and asked them about their in-house options. So yeah, for me, that worked out really well. It just made it very affordable.
So, because I'm putting on my mortgage hat, it's like,
Mhm.
do you have a W-2 job? Do you have hourly rate? Do you have a salary? Because it doesn't sound like
Yeah,
that was the case, right?
no. And that's primarily why I asked about the in-house options like crazy. I really pushed for that. I'm like, okay, I'm not going to meet whatever your, Freddie Mae, or yeah,
Yeah,
I'm not
Fannie,
going to meet
Freddie.
those. Yeah, yeah. I'm not going to meet those requirements. So I basically just talked to every bank and said, okay, I'm not going to meet those requirements. If absolutely necessary, I could find someone to co-sign, although I'd really prefer not to. I've got this much savings. Here's the experience I've done. Here's all the books I read. So I created a whole like real estate resume of this is my education, at least in it. I've helped these people out buy these properties and just in general worked to sell myself. And then, yeah, one of the mortgage officers was willing to take a chance on me in that way, which has been really awesome. And that's continued on to then the next properties as well.
So, like, what's going through my brain right now is like, and you were what, 23 years old at
Yeah,
that time?
I think I was 22. Yeah.
22, and you like, here you are spitting out like mortgage guidelines. Like, I know this is going to have to happen. So, we're going to do this, this, and this. Can you do it?
Yeah.
Like that's cool. And not many 22, 23 year olds even are even thinking about purchasing real estate, let alone knowing the guidelines. And so, I do want to dig back in because, I mean, research, podcasts, social media, following people, researching that internship. It just sounds like an amazing opportunity and just jam packed with a lot of experience that you were able to fill in a short period of time. So I want to dig into that.
Mhm.
But just for the
Yeah.
listeners to kind of see a little bit more of a full picture before you go backwards a little bit. Because right now you have how many total units?
So right now I have 3 units. I had 10 units last year and then I offloaded a bunch of them. So I just have 3 currently.
Okay. So you
Yep.
scale up to 10 and then back down to
Mhm.
3. So
Yep.
in a short period of time, that's pretty badass.
Thank you.
So the internship, right? So
Mhm.
this person, Brandon Turner, out there
Mhm.
flipping homes, doing things out there. When you were going out there, what was the job? What was the expectation that you were going to be bringing to the table for his team?
Mhm. So going out there initially, I came out there to help him flip properties on Maui. And within about 2 months of me being out there, he said, okay, never mind. I don't want to flip houses on Maui. This is a headache. There's so much just like government regulations regarding renovations. You have to put so many permits through, and their permit office is extremely slow. It ended up being that yeah, it was very, very hard to do a fast flipping business out in Maui because it just everything takes like 8+ months to get something to go through. So yeah, so he pretty quickly dropped that whole idea of having me be like a bird dog, data researcher, everything like that. So he moved me over into pretty much like jack of all trades kind of role. So I was babysitting for him probably 3 times a week. I was doing some marketing research for his Open Door Capital. That's his commercial real estate syndication company. Trying to think like gardening, like cleaning up his pool, doing like just all sorts of random things, and then working on the real estate podcast with him, helping kind of manage that. Yeah, just he kind of put me into a jack of all trades role, which at first was kind of disappointing for me because I've always grown up just being a jack of all trades, never getting to really specialize too much. But I started realizing that that's actually what ultimately makes me, I think, very valuable to a lot of people around me, is that I have connections to people and a pretty good understanding of a lot of different things, in enough that I can be the communicator and connector for things to get done.
So just bottom line, just getting shit done, getting it all done, having all the wherewithal to just pull all of it in and just get it all done.
Yeah. Ultimately, it's like the whole, if you're familiar with EOS, like with the traction model, I'm basically a very typical integrator. Vision's fine and vision's cool and stuff like that. But ultimately, I just want to like be talking to everyone, making sure that everything's getting done. Yeah.
So does that put Donato as the visionary side of that?
Yes. Yep. Donato is the visionary for Bright Investor. And then I'm the integrator, managing development, managing marketing, just head management over all of that. Yeah.
I absolutely love it, because my partner and I, I've got the books Traction sitting over there on my bookcase. That's how we run our mortgage operation. So
that's awesome.
𝐂𝐓 and I, when we started this, it was, hey, Mike, you're the integrator. I was on the visionary side. And as things have evolved, Mike's got a lot of vision stuff that's brought to the table. And so anyway, but that's how we run our branch too. So that's awesome. It's an amazing system. Process just keeps you focused. And as the book says, it's literally about traction. Get shit done and then move to the next thing.
No, you get that whole like the flywheel of momentum of just like, okay, things are getting done, and that makes the next thing get done even faster. Just eventually the momentum is crazy once you keep doing, the level 10 meetings every single week and sticking to the formula. It's been crazy over a year seeing how much momentum's building up now.
And for us, we have the mortgage branch. We've got a couple other businesses that we have, real estate, and we have a land project in Florida that we're doing. We had an insurance thing that we have been doing. So we had a number of businesses, and we were all running out of EOS, and click a little drop down this business, then drop down this business. So it's pretty cool in terms of being able to scale it.
That's awesome.
Yeah. So Brandon Turner, he's a San Diego guy, right? He's a California guy. Right?
No, he actually, I believe he grew up in Minnesota, lived in Washington for a long time. So kind of still on that, that West Coast. But then, he lives between Maui and Idaho now. He just has kind of two houses, bounces back and forth when he wants to be in the mainland. Yeah.
Yeah. So as time goes on, you're just getting shit done for him. And like, when you look at your, vision for your own real estate, what's changed? What have you learned along the way in terms of what you want to do?
Yeah, definitely learned a ton. Because again, I think I only been in this really for about 3 years. Starting in 2019 primarily. We're in 2023 now, but just barely. I've learned a ton about leveraging other people. I definitely the whole like Who Not How book. Blanking on the name right now who wrote that, but that book's been crucial to seeing how, the way that I was looking at potentially running my own real estate versus seeing how Brandon does it. And it's, okay, wow, Brandon's definitely at the top of this thing, and he's overseeing all these different managers who are overseeing all these different people going out and getting stuff done. It's definitely a completely different way of running a business. And overall, I think it's a way more efficient and way smarter way to build it. I think whenever you're relying on yourself to do 80% of the work, if anything happens to you, the business is screwed. So, I think that was one of the biggest things, is just looking at, okay, I can scale this way larger than I'm thinking right now. I was looking at only getting one property, and then within the course of a year, I got an Airbnb arbitrage, and then I got a 6-unit property, and then I bought 2 more units as well. So just like it scaled super fast when I realized I can leverage other people. I can, like partner with people, or I can just use their expertise and use their contacts. Just don't do it by myself. Keep talking to people, keep on asking for advice. And I think kind of to the point that you were talking about with the, knowing bank terms and like the mortgage terms for what I need to qualify. I think a big piece that I focused on a lot early on that helped is I look for all the gatekeepers to my success. So who are going to be those people who are kind of able to put the yes or no? And I either go and, kind of butter them up, like get to know them, have a good relationship there. But I also tend to ask them a lot about what would I need to do to make you say yes? What are the things that would be more encouraging for you to see when you're talking to a potential, borrower? And so I had a lot of conversations like that with the mortgage people, the different people with insurance. With my realtor, I would go out for coffee with them and just say, okay, what do I need to do to make this an easier situation for you and make it more likely that you're going to be the first, you're going to bring me a deal first rather than, coming to your top 3 buyers, first of all. So I think a lot of that has been super huge too, is just making sure that whatever the primary obstacles are that you're going to have to overcome to reach your success, kind of knock those out of the way, or at least minimize the damage that they're going to do to your road ahead of time.
That's awesome. That's awesome. So the realtor piece of the puzzle, right? Like what makes a realtor want to see a deal and then bring it to XYZ person? So, I mean, are you willing to share maybe a little sneak peek of what would be the reason they would come to you first?
So I think one of the biggest things is we know that like they're motivated by sales, they get that commission on the sale. And so I've done a lot for my realtor of trying to bring them other people. So if I know someone's looking to get into real estate, I typically I'll do a fair amount of research for them, help them find a property. Say like, okay, yeah, this is a good one. I'm not a realtor. So I call the realtor and I'll say, okay, I've got this person. They want to buy a house. This is the house that they're interested in. They're ready to put an offer in. And I basically just transfer the deal over to them. So it's pretty much a straight handoff. And I think I've done it maybe 4 or 5 times now. So at this point, I've definitely provided a lot of value in that avenue. And also most of the properties that I've actually looked through for a person that are actually a good, match for me. If I can't close on it, I go and I kick it out to all my other realtor friend or real estate investors around the area. So typically they know if I'm actually serious about wanting to go and see a house, looking at all the numbers, pretty much I'm going to either submit an offer or I'm bringing someone else in who's going to submit an offer. And I think that overall has made them a lot more excited to refer things to me, to kind of let me know before something's ever hit the market. Like, hey, our company is going to be listing this one over the next week. Is this one that any of your people would be interested in? Providing value. And then I think as long as they know that you're going to close or you're going to find someone who will, I think they're definitely eager to bring a property your way.
I love it. I mean, the adding value, providing value. I mean, that's such a big kind of reversing the engine type of thing, giver's gain kind of mindset. And it sounds like that's kind of what you were doing with investor girl Brett. I'm going to go work for a month for free. Like seriously, bro, you're going to work for free? Okay. Like, how did that go? And that's, was that an easy transition to work with her? Or?
It was, I think, especially with her case, she's trying to do a startup at this point of, okay, I want to create a syndication. She knows there's a lot of money that could be gained, on the farther end, but it's going to be a while. There's a fair amount of startup with a syndication, a lot of marketing that goes on, and then you actually have to perform on the deal enough, get the acquisition fees, and then you get distributions finally. So I knew money was going to be one of the big issues for her, is trying to figure out how do I build this team. I also knew that I knew enough of the different areas like the marketing, the website, and the systems to get integrated for her. That pretty much, like once I offered, hey, okay, let's just at least try it for a month. I'll work for free. I knew that was pretty much a shoo-in at that point. So it was a pretty easy sale, I think, on that regard. And for me, ultimately, I would recommend anyone do something like that. Like if you can get around someone who's got that kind of a following, that much education in real estate, and you can find a way where you can provide immense value. And if the only thing you get paid is to just know them and know their network, like that's worth so much, because there's so many things you can do off of that. Kind of like with the whole Bright Investor company now as well. Like, because I've built up this huge network of people now who are influencers in the space, I have so many more opportunities to potentially speak, go on podcasts, go on webinars, you know, advertise through them, potentially use certain people as affiliates. There's so many more opportunities that open because of just building this network out, that pretty much any other future endeavor I go down, you know, I've got access to private money lenders now. And like, it just really, if you don't have a network, you need to start building that, because it affects everything else. And it also makes it a whole lot more fun to go on this kind of a journey, because there's a lot of stress involved in real estate, obviously.
Yeah, I mean, it's something I can definitely relate with, because I started my own social media journey just 6, 7 months ago in July, and literally just 0 followers. You know, I just kept posting every single day, learning a ton, and you start to see the same people come in your feed, and they're doing stuff, and like you were saying before, comment, add value, and you start to kind of see people that are kind of in the same position as you are, like posting every single day, working on their content every single day. And I see this probably more on Twitter. People with like 300 followers, 500 followers, 1,000 followers, that are just, you know what, I'm going to go do this. I'm going to build my brand. I'm going to post content, add value every single day. And that consistency just stands out. And that's the stuff that just transcends, like being able to find your tribe, you know, and kind of learn from each other, build your kind of community, and, you know, just knock down doors, step your way up over time. And, you know, like getting in the door with Brandon Turner and investor go Britt, like not everybody has the belief or the vision to want to go do that stuff, or the balls to say, I'm going to work for free. You know, you have to be pretty confident in your skills and confident that you're going to be able to have other shit, you know, kind of worked out to be able to go work a month for free, you know, but like that didn't happen overnight, right? I mean, that takes time to build that infrastructure up to be able to do those kinds of things.
Yeah. Well, I think especially of the whole, you know, working for free or providing value, I think of a lot of it as the whole piece of either I'm going to pay for education by paying money, you know, to get to be part of some kind of mastermind, or I'm going to pay for education by failing and, you know, learning from my failures, or I can pay for education by not making money and doing free internships or working for people for a while for free. So there's multiple ways to kind of pay for education. And I felt that not just education, but then building up a network of friends who I can call on whenever I have a big issue or problem. That ultimately was going to be the biggest thing that would guarantee my success, is if I knew that I always had not just a knowledge bank, but also, you know, all of their network that's connected to that. A lot of times if I'll ask Britt about, hey, I have this question on syndications, blah, blah. She's like, oh, you should talk to this lawyer. Okay, awesome. You know, like that was very, very easy. And now I know the lawyer to talk to, and I can schedule a call. And like, it just, there's so much more than just only their experience that comes with building those kind of relationships. I think it's 100% worth the time. And, you know, I don't have anything against masterminds or groups or anything like that, but building the one-on-one connection instead, where it really is you and that person having a relationship, I think that's really crucial.
Yeah, there's a person that I've been, you know, following a little bit, that just been trying to understand more of how they do their thing. Pace Morby. And, you know, the whole buy it, get into it, gator loan it, and then get your seller financing on the back end. And so it sounds like you're familiar with that.
Yeah, I've been following around on his whole like gator loans and everything like that. Not super deep, you know, I haven't gotten super deep into it, but I've definitely been watching a lot of people going through it. I think I'm part of his Facebook group in there and such. But
yeah, the biggest question, just kind of off tangent here, the biggest question that I have is, okay, I go get a DSCR loan. Let's just say it's $100,000. I go get a DSCR loan for $70,000. Say you're going to put down 30%. I have the money for the down payment. Boom. I bring it. And, but let's say that let's say you're going to do a DSCR loan or a gator loan, whatever.
Yeah.
Now the money flows from one escrow, done. The seller receives $100,000. The second set of escrow, a different transaction, maybe it's the same day, maybe it's a different day, I don't know.
Yeah.
That $30,000 for the seller financing that's been, you know, negotiated to a point. You have a new note, and now that seller financing is done, but the title company is required to let that first trust know, right? And they don't, that lender doesn't want to have a second trust on top of it. So that's the part that I'm trying to figure out, is how do they get through those you know, hurdles of getting that seller financing on the back end, when, you know, because he's talking about doing it with zero money down, essentially, you know, having a you know, first and second for the full price. I mean, any thoughts on that, or that's something you're aware of?
It's something I've like really honestly just this past 2 weeks been like I was so confused. I kept hearing the term gator loans. I was like, okay, I'm not familiar with that term. So I've really honestly just started this past 2 weeks looking into that whole idea. I've looked at seller financing, but I haven't been super, I guess, in tune with the whole like assuming mortgages or doing like the debt service. I'm assuming that's debt service cover ratio, right? Like,
Yep.
That's that type of one. Yeah. I'm not super familiar with that. Like every time I've gotten into it too deep, kind of been like, well, I have other options, to buy properties right now. So I haven't done a ton of information digging actually on that, but it's a good question.
Yeah, we're on the same page on that.
Yeah.
So from a syndication standpoint,
Mhm.
If you were to explain that to the layperson out there, in just simple terms, how would you explain that?
Yeah, syndication. So ultimately, basically, I find it kind of easy to just bring it down to a simple aspect of, okay, if you're looking to buy a property, we know that you can either use money from a bank or you could do private lending, like you could get in a partnership or something like that, but you're using other people's money nonetheless. When it comes to a syndication, typically what that means now is you're going to be pulling multiple investors to buy one property. There's different forms of syndications that you can do, but essentially, let's say that I have a $10 million apartment complex that I want to buy. I'm in no place to buy a $10 million apartment complex, but let's say I've built up this company that's amazing at finding and analyzing and managing apartments. So I know I have the team to manage it. I just don't have the money. What you can do is you can start up a syndication and you can raise money from different investors who potentially have already, they've already built their businesses, they've made their money. They're not wanting to play an active role in investing anymore. They just want to do the passive, write the check, send it on, and have someone else do something with it. But they don't want to do stocks. It's very similar. It's kind of like the stocks of real estate in a sense. Is kind of how I look at it. Ultimately, I think it's probably the ideal view for most people who want their money in real estate but don't want to be doing the day-to-day work of it. And there's a lot of benefits too with that. Like there's you can pass on depreciation through syndications. There's different tax benefits that can go on with syndications depending on how they're formatted. But yeah, so from the management side, basically you found a property, you've created a syndication company, typically like an LLC that people are all going to create, like put their investments into. And I'm trying to think of how to best word this, but essentially there's two different ways, or three primary different ways that you can go about raising money with it. So you can either do it privately, where it's people that you have a personal connection with them. You let them know about the deal. You basically walk them through the whole thing and you manage raising money from them. What a lot of bigger influencers are doing is instead they're marketing the fact that they have a syndication company out to all of their followers. They don't have a personal connection with them. So with that, what you have to really be careful on is you have to make sure that the people that you're raising money from are accredited investors, which I believe means if you're a single person, I believe it's $1 million net worth minimum. And I think the other is like if you're making 250,000 or more. I forget exactly the terms. I think it's changed a bit over the years, depending. But the primary thing is it's just making sure that they're actually they've had enough money to actually know what wise investing is and kind of how to manage money, because you don't want to be preying on a bunch of people who make $40,000 a year and you're taking all of their savings, putting it into something, and there's the risk, you have no more money. But yeah, so there's a couple different forms that you can invest, and then the biggest reason that it helps so much is just that companies that are looking to scale and don't have money out of their current active deals and can't pull any equity out at that point, they can just keep on getting this flood of money coming in. And so that's where you see, companies like Open Door Capital, you see IGB Capital, Cedar Creek Wealth, a bunch of these different syndication companies, and they're just exploding with the number of units that they're buying. And there's not necessarily no way, but it would be a whole lot harder to grow at anywhere near that rate if you weren't utilizing other people's money. So it's tricky as heck to get into syndication. So I definitely caution anyone who's looking at just doing a giant crowdfunding to really make sure you have your bases covered, because there's a lot of legal trouble you can get into if you aren't, crossing your T's, dotting your I's. But it's definitely an awesome form of real estate investing. I definitely want to get into it someday here soon.
So as you kind of look at the future here, you got Bright Investor, You've got your own real estate stuff that you're going to continue to do. What's the for the real estate side of things? Kind of what's the next move that you'd like to be able to do the next year or two? What's your next type of transaction? Is it here in Missouri? Is it somewhere else? What type of deal?
Mm-hmm. So I want to get a portfolio done first in Missouri that completely covers my expenses. So get the whole, financial freedom. I think it's like level 2, where, you've got all of your basic expenses covered. I'd like to build that just in Missouri, first of all. From there, then I'm looking to move out probably to Chattanooga or Lynchburg. I like those ones. Their rent to price ratio on average, I really like that aspect. So I'm looking to move out, but that'll probably be about 2 years from now down the road. Looking primarily to still stay in the single family, maybe duplex type range. If I'm only going to have a couple properties in Rolla, I want them kind of spread out around the area because I'm not totally sure where Rolla is going to grow primarily. But yeah, just looking to kind of keep adding maybe 2 or 3 a year for the next 2 years, and then looking to expand out in Chattanooga. And that's when I intend to more hit hard and start scaling up, primarily staying just in the multifamily type.
So long-term rents. Okay.
Yep. Yeah. No, I got into the short-term rental, and it's interesting, but it's honestly like its own entire company. It really does not feel like an investment to me, honestly. So I'd rather spend all my working hours on Bright Investor, making sure that builds out, make my money off of there, and invest that into real estate that's more passive, using property managers, things like that.
Oh, totally. So for Bright Investor, the launch is coming up in March. How do you envision this looking in terms of scale, growth? Like what are some of the next steps after the launch?
Yeah, so after launch, we're looking at bringing on affiliates is one of our biggest things. We want to start creating kind of a community around this and helping to build brand awareness. We're looking to, within the first 6 months, try to get to about that 1,000 subscriber mark. We think it's definitely possible. The value itself, the whole vision for Bright Investor came out of a personal need that I had of, I was looking all over the US, what markets do I want to invest in? And it took me probably 30 to 40 hours of reading and looking at tons of different sites. I probably paid over $300 a month in subscriptions to view this data. Yeah. And ultimately it was just like, okay, I've been researching and I'm seeing all these different zip codes come up for the crime's sake. And now I'm going over here and I can't remember which zip codes it is that now have the best rent. And it's a lot of data to be crossing over. So I have a lot of faith in Bright Investor being something that'll be valuable. And I'm already using it for, every time that I get a new property, I'm plugging it in there and seeing it. And that's kind of why I've chosen Chattanooga and Lynchburg, is just seeing the area. I'm like, okay, yeah, exactly.
So if this is the stock market, this conversation that's not published yet could be considered insider information.
Yeah. I suppose. Yeah, there could be a little bit of data on that. Yeah.
No, that's awesome. I'll have to check it out. Yeah. I mean, the whole short-term rental side of things, it's such an interesting, I call it a game. It's just blown up in different markets, and some markets are more established than others. And some other markets, have just put the clamps down on terms of regulation and licensing and permits and all that stuff. That as an out-of-state investor, because I have stuff in Florida, so I'm under that classification, I guess you'd say. Yep. But in my mortgage job, every day it seems like I'm talking to somebody that's looking to be able to purchase, cross state lines, short-term rentals, long-term rentals, multifamilies, etc. It's just such an interesting dynamic to be talking to somebody from 1,000 miles away who's buying maybe 1,000 miles the other direction, and trying to get the data to see if it's going to be a sound investment. Because at the end of the day, all you can do is make the best guess on the data that you have.
Yep.
And to have a tool out there that could help bridge the gap on pulling some of this data into one portal seems pretty cool. So in terms of the types of data, can you guys give a refresher on the types of data? And is it residential, commercial, or what's the data look like?
Yeah, so the data, we've catered the whole thing towards the residential investor. So there are some programs out there already for commercial real estate investors. I believe they cost, I think it's around $3,000 a month. So it's definitely a lot higher barrier to entry. So that's kind of why we wanted to bring the cost down like crazy and focus it more just towards data that, short-term rentals, long-term rentals kind of would most benefit from. So we have, like I said, like crime data. Rentometer rents, Mashvisor rents. We use Atom data for a lot of our appreciation sales. So you can kind of see what zip codes are appreciating better and faster than other ones around it. We've got school data from greatschools.org.com. I can't remember right now, but we're using Great School data. And then let's see, we have industry growth. And then kind of within all of that, we also have like, you have either like the rent data of just, here's what the average rents, median rents, top 75th percentile stuff. But then we've also got like, okay, looking at the zip codes, where are the best rent areas, just color maps, so heat maps and everything like that as well. It's not just the data, but it's, again, visualizing it in multiple different mediums. So same with crime, you can see a heat map, or you can see individual incident, or you can just see where is crime going up and where is crime going down. It just helps to kind of look at it through multiple different lenses back to back.
Cool. So take a 5-year vision. What do you hope happens in 5 years with the company?
Yeah, ultimately, what we're really looking at is, we'd love to see it grow to around 10,000 plus users within 5 years. That's kind of the dream, is to be a product out there that a lot of investors are using to make sure that they're maximizing their rental portfolio. If you've got 5 different properties, you're looking at making a jump on, and you look at it on the appreciation scale and you go, oh, well, these 3 options are all in a much worse appreciating area than these 2. Okay, let's go a lot harder on these, because ultimately that's going to make a lot more money down the road. If you're always optimizing the area of every single one of your investments, your portfolio is going to grow way larger. So we'd love to see that it's just an adopted piece of software, kind of like Rentometer and Crimeometer have been, where it's just before you make an offer, you go and you check it. It's a part of the habitual process of underwriting. So yeah, we'd like to see it just be a common tool used. We're really looking at trying to integrate it with other platforms. So we're trying to figure out ways to make it more friendly, where it just becomes part of your overall system. So not really looking to expand its use into other areas. Like, we wouldn't want to do anything with driving for dollars, nothing like that. But looking at ways for, if we could collaborate with Deal Machine, or if we could collaborate with PropStream, these different ways to just make it all part of a better system, help them out, help us out. Mainly just looking to grow in integrations rather than in application.
So the pulling all the software together to make all these systems run, how has that been? Who's been working on that part of it?
Yeah, it's been a lot. We've discussed with a lot of these different companies to get permissions and contracts in place, obviously, to be able to use their data. But then for the actual building out the software, bringing all of the different APIs together, we brought on David Lopez. He's out in Maui. I met him while I was working with Brandon. So he kind of began heading up development in the initial phase. And then I've kind of been working in tandem with him, managing developers. We brought on 3 different VAs from Mexico, Colombia, and India. And they've been just killer. We used Upwork for that to find all of them. Cool. So basically just bring on all of them. We've been using like Amazon Web Services for all our data hosting, MongoDB for our actual database. I don't know. We tallied up all the things. I think we're using over 40 different softwares at this point to kind of pull the whole thing together, like different APIs and such. So it's definitely a huge collaboration of things. And that's just been a lot of research and a lot of talking with the developers, figuring out, okay, what's standard for a SaaS company like this, and then supporting them as best as we can.
So go back 15 years. Did you ever envision yourself starting your own business, getting in the real estate world? Was that something that you've been thinking about for a long time, or did it come out of nowhere?
The software side, yes. I'd say at this point, 15 years ago, I guess I was like 8. So maybe not too much
12,
at that
10 years ago. Maybe.
Yeah. So let's say like that. Yeah, I got into computer programming when I was 10. So I did that just all day long. I absolutely loved it. I'd make games, make websites, whatever. So I definitely saw myself going into software eventually. I really, really had that dream. The real estate threw a curveball around age 18, 19. And so I didn't know what I was going to do. I kind of thought I was just going to go full into real estate, and I loved real estate when I got into it. But I also really missed the aspect of just like creating these kind of projects. So, definitely did not see any kind of future with real estate. I thought it was kind of one of the, it sounded almost like insurance or some of those other jobs that are like, man, I don't think that's many kids' dream jobs growing up. I don't know, but yeah, I mean, once you figure out all the risk involved and the creativity, the strategy, it definitely becomes a whole lot more fun.
That's awesome. Yeah, I'm just thinking about myself here for a second. Like, you're 22, spending out mortgage terms, trying to buy a property. I didn't know what a mortgage was at 22. I've been doing this for 16 years now. I was at 23, graduated with an econ degree, working at the melting pot, serving tables, having like a blast. Like, we had all kinds of
Yeah.
friends like that I grew up with, all working at this restaurant. If you're a manager that worked at the melting pot, I'm sorry that you had to manage me. I'm sorry. But we had so much fun. And then I got a job at Citigroup, and in 2006. And Kim Dotson, who I still talk to every now and then, she used to come in with her kids with grades, the report cards, and she kept requesting to want to sit in my section. I'm like, okay, this is awesome. And we had regulars like that every now and then. But after like a year, she's like, I want to try to get you a job. I'm going to get you an interview, and this is what we're going to do. So I didn't know what a mortgage was, but she got me an interview. I got a job. I think my degree from WashU probably helped out. Like, I looked good on paper, so to speak, and I got my feet wet. They had a great training program, and so then I did what I did for however many years. And so here you are at 18 thinking about real estate. I mean, that's not the average person, which is crazy. It's cool. But if you were going to give advice to somebody that's 18 or 22 or 28, because again, on this channel, we don't care where you are right now in your journey. Like, you can't change the past, but you can change the future. That's what we're all about. What type of advice would you give to somebody that wanted to be able to, not necessarily real estate, but just wanted to be able to do something entrepreneurial, build a business, whatever it is? And what comes to mind?
I think one of the biggest things that I've done a lot throughout growing up, kind of all throughout teenage years, was looked at the people who I actually envied their lives and go talk to them and say, okay, what do you do? What are you doing that's different? What are you looking forward to? What are you pouring your time into? So there's one of my friends, his name is John Nisbet, and I kept on seeing that, my gosh, he's out in Colorado again, and now he's in Utah, and now he's over here, and he's everywhere, and he's only maybe like 6 years older than me, and he's snowboarding every other week. It seems like. It's like, well, heck, in 6 years I'd like to be doing that. And so kind of talking to him, and he had gotten more into business, making himself just an asset to basically anyone. Like, anyone who talks to him, they walk away smarter and happier for having had the conversation. So talking to him, and then talking to other people who financially were where I wanted to be, and not always, I guess, like, their lifestyle wasn't always where I wanted it to be, but still just trying to gather different data. I'd say that's one of the biggest things, gather data of the people who you want to be like, even if it's only in like certain key areas, and then kind of craft together a vision from all that different stuff. What do you want your life to look like? So for me, freedom of time, ability to do adventure, I think that's crazy important. I love risk and adventure, so I knew that needed to be a part of it, and that really only comes from a fair amount of free time and enough money to travel. But then I think a really big importance too is look at, what do you need your life to look like, and strategize how you can make both possible. So for me, family is super important. Friends are super important. I'm a huge extrovert. Just like having fun all the time is crazy important to me. If I'm not having fun, I try to quickly pivot and figure out, what's bogging me down so much that I'm, depressed or bored or whatever. Like, how can I bring some pizzazz and fun into what I'm doing? That I don't think has come as much from experience of other people. That's more just been something that I've had to kind of grind out, figure out how I can leverage other people, and then kind of just priority stack. Just know that, okay, like, yesterday was a snow day. There was snow everywhere. It was probably 10 inches deep. And so I woke up and I was like, well, I worked, I don't know, probably 10 or 11 hours yesterday. I'm just going to have a snow morning. So we snuck over to one of our friends' house, me and my wife, and we just began barraging their house with snowballs and did a snowball fight for 3 hours. And, then came home, had lunch, and then I went back to work and whatever. And it's knowing where certain priorities are that give you enough energy and like enjoyment of life to then jump back into the grind and the hustle and the mundane that's required for still getting ahead. But not allowing it that you pour so much time that then you wake up, 10 years later, and you finally hit your financial goals, and you're fat, you don't have any friends, and like, you're not where you want to be because, if you're financially free, but you can't go surfing because you have joint problems now, that's no fun either. So I think definitely prioritizing the other areas of lifestyle while you pursue success is really important.
So the whole balance idea, right? I mean, like, I know personally I have my own opinions on that, but how do you view balance versus prioritizing?
Yeah. I've listened to like David Goggins stuff for a fair amount, and he talks a lot about that it's not about balance. In a sense, it's like, sometimes you really need to look at what's important and completely tilt the scales, and you're just all in on something. I really like that because I think I focused so much on balance that it made everything kind of boring. Like I was never aggressively passionate about anything. Everything was in kind of a mix, and I felt almost ashamed to overly share my dreams because it seemed kind of, like, hey man, chill out a bit. So um, I think it's important to really just like write out a list, like write out what do you want your life to be like, and then be real with yourself. What's it going to take to get there in 5 years, or however long of a vision you're looking at. Um, and then if there are certain pieces, like for instance, I really want to be building some muscle the next 2 years. I really want to build muscle, build more athleticism back, and just I want that to be a priority. And so if it is, then I need to be okay. Every morning now, throughout the week, I'm going to the gym, and then I'm doing sports like 3 or 4 times a week if I can. I'm prioritizing it and I'm scheduling it in my calendar. And if a meeting needs to happen, it has to be scheduled around that. It's kind of a non-negotiable. So I treat the other areas of my life that are important. I treat them like they're other business, meetings and stuff that I would say, hey, sorry, I can't do this because I've got this meeting. So it's kind of the whole idea of, if I wouldn't schedule a date or something like that in place of this meeting because I already have a business meeting at this time, then I'm not going to schedule a business meeting in the place of where I already have a date, because they both hold an equal importance right now of, in my life and where I'm going. So I think, I don't think you always have to be actively trying to figure out, am I balancing everything, as much as just prioritize the things that are important by putting them in your calendar and then actually doing them when it hits that time. And just not wavering on that. If it's set in your calendar, go ahead and do it. And then you don't have to use so much mental stress to make sure that you're balancing all these different areas.
Love it. In terms of like your peak optimal hours, are you a morning person, middle of the day person, late person? Where do you fall in the category?
So I think this is probably with most programmers. I would say they're almost like 90% of them at least are all night people by far. So ever since I was probably 11, I was staying up till like 1 a.m. and then eventually till like 3 a.m. programming, because it was just, I massively thrive in the night. Yeah, get into a huge zone. Like once I get past 11 o'clock at night, I'm just a tank and I can just keep on going and going. And so it's like, it's really hard because I know that that's amazing for my ability to output software and problem solving. But then when it comes to other areas of lifestyle, I know that I need to be a morning person for it. So I've been very strongly shifting myself towards being a morning person. So I'm getting up on average around 5:45 each morning now. Cool. Get to the gym at 6 and kind of deal, just like trying to work that in. So I actually have enough time to set up my day, do my reading and everything like that before I've started working. And that's overall been good, but it's been quite a stress because I still tend to go to bed at 1 a.m. So it makes for light sleep.
Yeah. I mean, at the end of the day, right, like there's only so much time in the day to get stuff done. And, we, at the end of the day, choose what we decide to spend our time on, whether we're consciously thinking about it or it's our subconscious taking over and going into our typical routines or programs. And, like I said before, the average person that's 23 is not running a business, not building a business. And so what would you say has, what type of skill set or trait has kind of put you in a position to be able to do these kinds of things where the other person may not be able to or even want to?
Yeah, I think that's a good question. Probably one that I honestly haven't thought a ton about because I've just kind of, like I've said, I jump out of the plane and I just start doing. I think one of them is just the willingness and ability to just go ahead and do the next step. I kind of like I'm talking about, I don't really get too like paralyzed by analyzing a situation. I kind of just go, oh, okay, that's the next step. And I go have that conversation or I go and do that thing. And so I know that that's a hard one because I think a lot of people, honestly, that's just so ingrained in their personality that it's hard to get outside of that. But I think especially if you're an integrator and not a visionary, I think a lot of people who are, struggling with analysis paralysis are amazing visionaries often, because they tend to have just a million ideas and they tend to have a lot of struggle executing them. But I think like if you're in the role of integrator, where you are over a bunch of people and basically you have a vision that someone else has told you and you've broken it all down into steps, and you just have to ensure that the steps happen, having the ability to kind of just not, don't pause before every single step, just start getting stuff done. And if something messes up or something goes wrong, figure it out from there. Don't wait to make sure that you're doing everything right before you start taking action. Obviously, as soon as it comes into the legal sphere, make sure that you're being careful. Right. But really, I think a lot more harm can be done by not taking action than can be done by taking too much action too fast. Because then, as long as you're taking action, typically you can take enough steps to get yourself out of a bad situation as well.
Yeah, I love it. And that's what's just so interesting about this business world, right? Like things that I've learned along the way. And I have a sales coach, that I've been working with, and my partner, Mike, we believe in the whole coaching thing to be able to get you into systems and take you out of your comfort zone. And just understanding that people are just wired differently, like the visionary and the integrator, like they're wired differently. You have your person that's never going to be one of those, and they're going to be in a different role there, and they're going to be better, more satisfied, being in a position that they're going to be executing other roles, right? Like that's just kind of how life works, and just understanding those things. It's interesting. And there's all kinds of books and courses on this kind of stuff, the whole personality stuff. Do you think do you envision yourself ever kind of getting to that next part of the equation, the visionary, at some point down the road? Not that it matters, right? Things evolve, right? And hold on.
I think it's like, go ahead. Yeah.
The reason why I asked that question is you were saying before, like the nighttime question with the computer programmer, 90% of people are nighttime people, not daytime people. I mean, what percentage of computer programmers would you say are extroverts?
Yeah, man, I don't know.
like 2%?
Probably like, I was gonna say like 2 or 5%, probably. Yeah, like so, the actual like serious programmers. Yeah.
So like, I mean, that's the reason why I asked this question, is that like things evolve. Like you got this kind of blended type of skill set in terms of extrovert, going and knocking down doors on Instagram to Brandon Turner, and then the investor girl Britt, like that's not a computer programmer type of personality. So it's just, I think it's interesting.
Yeah, no, it's honestly, so much of who I am, and like just I've grown so much in mindset over the past 3 years that I would not be surprised if I change over to visionary. I think the problem is I always want to be working on the project. I really struggle with the whole just keep on brainstorming. My older brother, he's an amazing brainstormer, like perfect, typical visionary. I've so far in all of my life, I start doing stuff. Like I'd rather have my hands in it. I don't know. Yeah, I mean, I know I'm already continually going more and more into the visionary section from the sake that I'm constantly looking for ways to leverage and hire out work. So I'm definitely not getting caught in work. And so in that way, then I do have to also help convey a lot of the vision, and it's more managerial than it is doing the individual tasks. Yeah, I don't know if I feel like I'm just not quite creative enough, honestly, to be the person who comes up with 30 ideas a day. I just kind of like, if I have one idea, I just start working on it rather than like, keep on brainstorming. So I don't know. I'm curious to see where that goes. Yeah, like 5 years from now, am I going to be really shifting hats at that point?
Yeah, and like for me, I'm a numbers guy. Like I grew up like I was an A/B student, had good GPA, whatever. My worst subject was like literature, reading, writing. Like, that was just my worst subject. It just wasn't my thing for whatever reason.
Yeah.
And I never ever thought I'd be putting content out like ever. It just never crossed my mind. But like certain things happened, pushed me out of my comfort zone, and I just started doing some stuff. And like here I am putting more content on Twitter, Instagram, this podcast. Not necessarily all of it written content, but like putting together a plan, putting ideas out there, trying to be able to educate, et cetera. Yeah. And along the way, like I just got to this point where I said to myself, shitty content is better than no content. Like, and this is the thing I tell other people is like, your first 6 months, no one is going to give a shit about what you're saying because they're not going to see it. No one's gonna see it. That's just how the
It's
algo
literally
works.
just practice. Yeah.
Right? It's practice. So like I was able to just do it, learn, and then like, okay, I kind of now I know where I'm trying to go with this, and now I'm kind of creating my own voice with
Yeah.
this. But anyway, the part of the reason why I bring it up is that like going through this entire process, I have more clarity of where I want this business to go for me, this platform. And it kind of dovetails into this kind of your experience a little bit in terms of being young, getting into real estate, building a business, building wealth. Because not everybody is at that point in their life where they want to, or will never be in that point in their life where they're gonna want to do that. They may just be at a point where they're gonna be, just getting by.
Yeah.
And for Strive for 25, I talk about the stair step method, which is just something that it's the term that I use for somebody that buys a house, live in it for a couple of years, save up, buy the next one, and then turn the old one into a rental.
Yep.
Do it again a couple years later, and just stair step your way up. And the example that I've given multiple times is, if you buy a property for 150 and then 250 and then 350 and then 450, that's a total of $1.25 million in portfolio value. But then you take like 30 years and you got renters paying down your mortgage, values going up,
appreciation.
Appreciation. That's a $3 million portfolio.
Yeah.
Like a $3 million portfolio by buying one house. You have to be able to make that a reality. You have to start somewhere. Yeah. And so that's the message one of the messages that I think is important for the everyday person to know is that, like, hey, you don't have to have, the vocals of Beyonce or Kelly Clarkson or dunk a basketball like LeBron, who, amazing at what he does. There's other ways to be able to get ahead, and you don't have to be glamorous about it. There's ways, the millionaire next door kind of mindset.
Yeah.
And, that's just one example of ways that people can do things. And it takes a certain set of skill set to be able to make it happen in reality over that time frame. And then the other thing is that, the average person is just barely getting by in terms of being able to save money, because saving money is one major step in terms of being able to then invest. And then if you choose real estate, great. You choose NFTs or stocks, whatever, great. But you have to be able to put money away and save first. And so the average person in their 20s or 30s is at a point in their earning journey that's not going to be as high as it would be maybe later on their journey. So it's a struggle to be able to put money away. But time is being on your side. Putting money away sooner is a path to be able to build wealth. So we're talking about side hustles and what's something that somebody can do to be able to build extra income on the side. And, the reason why I bring it up is one of the things that we want to do on this channel is we want to take 1,000 people out there, help 1,000 people over some course of time to be able to then build a side hustle or a second stream of income that's generating an extra $1,000 a month. Yeah. And if somebody can save an extra $1,000 a month from where they are today, and then maybe in a year be able to invest, they're going to be much better off than they were before. And not only that, I just put this out yesterday because I was having an intro call for the podcast, and a local guy here, and he was talking about how we did these projects, these software coding projects for a couple potential startups, and they didn't work out. 2 different ones for a year, they didn't work out. And he's like, at the end of the day, like, it sucked that we spent all this time and energy. Like, I was doing this on my lunch break. I was doing this late at night. I was like not going out with my friends. And I was doing this stuff, and everyone was naysaying and questioning me what I was doing, like calling me this and that. And he said, you know what? Like, I don't regret it, because I got really good at what I did at my job, because it helped me sharpen my skills at my job, and I got pay raises there. And I'm like, now you're more valuable. Like it all just complements each other. And, at the end of the day, like, I know when I was 23 or 25, I wasn't thinking about a side hustle. Like, I was working at the restaurant as a side hustle because I loved it. Like, we had so much fun doing it. Like, I got help with the bills, but like the average person I'm talking to, that's not doing a side hustle or not building a business, they're not even thinking about it. And so our goal is to maybe shift the mindset, or help shift the mindset, or inspire somebody to think about things a little bit differently, what's possible. Yeah. And so, like, if you look at, I'm just going to ask you a personal question. If you look at your kind of personal network, which is probably different than it was 3 or 4 or 5 years ago, as time has gone on, you kind of chosen who you want to be around. But how do you see the average 25-year-old in terms of, do they believe that they can build wealth? Do they believe they can get ahead? Do they believe they can save and invest?
Yeah, I think, especially around where I've grown up, because there's not much of a hustle community where I grew up. So like, just the average 25-year-old around me, I really don't see them honestly thinking about retirement at all. It seems like the only main plans I've heard is like, the typical 401k or IRA type deal that happened to come from the job. They didn't choose that job because it had it, but it did have it. So then they decided, okay, cool, I'll do that and get the company match. Maybe. It's definitely, there's not near enough focus on that at all. And I think, I don't get crazy into the whole economics just because I don't have a degree in it. I don't have enough education at this point yet still. But the rate of that inflation is going right now, and the rate of printing the dollar and everything else that I'm seeing going on right now. And then people are talking about, when you retire, you'll be able to retire on, $1.5 million or 2.5, whatever it is. Like, man, I don't know if in 40 years that's going to be worth much at all. Like, I have no idea what's going to happen with the dollar, but it definitely looks like it's on a trajectory to be, to be going up a lot faster than we typically use our calculations to think of how much am I going to need to be pulling? Because a lot of people say, okay, if you do this much, you'll be able to pull 40,000 a year. And it's like, oh, that's awesome. But that may be equivalent to, pulling 18,000 a year now. I don't know, but definitely, that's where, I think that's like the huge power of real estate is that rent raises as it goes. Like, you have rents match the local area. And if you have a paid down property, you're potentially, like you were saying, even if you only got like 5 properties, you can be making some awesome money because you don't know what the rent's going to appreciate to. But rent is generally going to reflect the power of the dollar, depending on your market. But it's going to pretty closely reflect what the dollar is doing overall and how much the dollar is buying in your area. So, yeah, I mean, I really wish a lot more people my age were looking into that. And so I agree with your whole mission of, trying to help 1,000 people. I've been doing that with like my sister, my brother, one of my friends, actually, I guess like 3 of my friends. I've helped them all to buy their first house hack just to say like, okay, just get the one. I promise you. Like, I mean, obviously, like I'm having them read and listen to podcasts, but I'm like, just get one, learn the process. You'll be so much easier to get your second one. If you absolutely hate it, you can sell it. I'll probably buy it from you because for the most part, I've only gotten them to buy properties that I would have bought. Because it's just like, man, this sets you up for so much success, whether that's real estate or if that's, side hustles that you turn into a full-blown business or whatnot. Just creating something bigger than just a typical retirement account, I think is going to be really crucial because if the different things, at least that I'm seeing in the news about what's happening to the dollar keep happening, we're going to be pretty screwed.
Yeah. So two things to add onto that, because we had a gentleman by the name of Mark Oshiro on. He's out of Hawaii, and some of the things he said just like hit me hard. He's a firefighter, also a real estate investor. And as a firefighter, he's got a pension and you have to serve a certain amount of years. And so, something happened to his father, retired at 65 maybe and had a stroke. Like, pretty soon after that, it's like, well, you work all those years and then you retire and then shit goes the wrong way. I mean, he's doing okay right now, but it hits you, right? And it's like, well, what if something happens to me, tomorrow or a year? Like I won't have a pension because I wouldn't have had the years potentially by that time. And so, he said, I have a pension. It's great, but that's too risky. That's too risky to have that alone. Like he had a buddy that was investing in Pittsburgh, like buying single families and multifamilies in Pittsburgh from, I think it's like 4,000 miles away. Hawaii to Pennsylvania. It's like, I think it's like 4,000 miles away.
I think it's more than that, honestly. Cause I think I'm about 3,800 miles from Maui. So yeah, it's a truckload of distance.
Okay.
Yeah.
It's crazy. Know. You would know because you
Yeah. I had a girlfriend back in Missouri here. I was counting the miles.
Right. And so like I think he's up to 14 units after like only like 2 years.
Jeez.
And
awesome.
had somebody that was already doing it and was able to kind of accelerate the learning curve and learn from their mistakes. And, there's a book by Gary Keller, The Millionaire Real Estate Investor. And it's a good book. There's a lot of real estate books that are good, but there's one part in this, and I forget the exact quote, but there's a part in the book where he talks about like leverage. And this is kind of how I explain it to clients is like, if you have $10,000 and you want to invest in the stock market, and let's say you get 10%, which would be a great year in the stock market. What's that return? Well, it's $1,000. Awesome. Well, you take that same 10,000. Let's say you were going to put it into real estate. Well, what does that do? $10,000. Well, let's say that's like basically 3% down for first time home buyer. You buy a home for 300,000. Let's say you get 3% appreciation the first year. Yeah. You and I both know what that's going to be. It's $9,000 in that first year in terms of a home price appreciation. Yeah. But people I ask that question to, they kind of, wiggle around and don't get the answer right. Maybe it's 1,000 or 5, whatever the number is, because they're looking at the dollar amount, the actual
dollar amount that you put down. Yeah, exactly.
And it's like,
no, that's huge. It's like,
right?
Wait, whoa, what? And that's only with a 3%. Okay, now let's say it's a value add property, or let's say it's in a emerging market where it is maybe more like a 9 or 10% appreciation right now. It's like you have no idea how much money you could just suddenly shoot up in value.
Totally. And then like 30 years from now, and if you keep doing that, like sky is the limit. Like, and like I was reading something, where someone was bashing real estate, where they were saying, well, it was an article about like showing home prices over like 80 years or 100 years, like it was keeping up with inflation. Like you're basically just increasing the value of the house with inflation. And it's like, okay, but your alternative is to go the opposite way. And then you throw in the ability to be able to put 3% down on a property and you're getting the appreciation on the entire asset over time. Like it's a major hack in itself. And like, I don't think enough people realize the power of it, and let alone know. Cause like, I like me personally, I had to get to this mindset where like, and it started because I read this book by Tim Grover, Winning. And this actually happened a couple years ago. And he talks about like Kobe and Michael, their mindset, like they don't count down to a deadline. They count up to a deadline. It's like, I'm not stopping until I get this thing done.
Yeah.
I'm not stopping. And so like, just kind of changed the way I look at things. And it's like, what, if I want to go buy real estate, I know that I need to have this much money to do it. It's just like what you were saying before about like, this is what I got to do. I'm going to reverse engineer how to get there, and I'm going to make it happen. And now I'm going to go be in Maui, hanging out with Brandon Turner's property and whatever, which is
cool. No, I love that whole piece of the leveraging. Like, if every single stock that you invested in, you got 10 times the return, because you're like, everyone would be freaking out. They'd be using that hack left and right. But no, instead, like, so whenever they look at these whole like return on investments, it's like, well, yeah, if you're buying properties cash, then sure, that's, you're only getting a 3 or maybe 5% return on investment on average. But like, you multiply it by 10, or even like you're saying, maybe multiply it, if you're putting only 5% down, multiply it by 20. It's crazy the amount that you get there. I think one kind of key principle too to think of, that's kind of what further blew my mind about real estate, was the aspect that no matter what, the price of the property, like the value of the property, is appreciating at 3 or 5%. That doesn't matter how much equity is in it. And so if it's the whole piece of, it's not just about return on investment, it's return on equity as well. Focus on that number. And, if you've gone 4 years, 5 years or something like that, and there's a lot of equity in there, pull that out, buy another property. And now with not changing this one at all, you've gotten another property that's also maybe same price, and it's appreciating at some stupid, rate as well. It's just crazy, because you can't do that with stocks. You can't suddenly pull out, a ton of money from the stock and go invest in another stock without it decreasing the value of the current stock you had. Compared to this one, nope, the value stays the same. It's still appreciating at the same rate, and you've pulled your equity out and moved it along. So now overall your portfolio is just performing better and better, and you can keep doing that. It's crazy. It's just completely, it's a whole different ball game. And people, they don't focus on that. They think about it as like cash purchase real estate, and they look at it just as that, like the rent is the primary thing that you're looking at as income. And they don't think about the fact that you can be moving equity around. It's like, man, when you get in the game of leveraging equity to buy more properties at 1/10 of, the price of the value, and all of these across your, portfolios all appreciating at 3%, 10 times whatever you put into it. And again, even multiple of them you didn't even put any money into. You just took equity from one and shifted it to another. Like that was my dad last year. He started getting into real estate kind of more once I started bursting into it. And he bought a property last year, and he put no money into it. He just shifted equity from one of his other properties. And this year, he just got it reappraised, and it's grown by like $70,000. It's like, okay, for no money, he got $70,000 in 1 year. Like, this is stupid, but it's just, that's the value of now not only having a portfolio, but having an asset that holds equity that you can transfer into more investments that appreciated. Yeah, overall, huge gains.
Totally. And, I think the headlines out there are talking about huge house price crashes coming and whatever. Like maybe prices go down. I don't know, because they did go up very, very quickly for a couple of years,
Mhm.
obviously with the printing of money. At
Yep.
the end of the day, like there's only so much real estate out there to have. There's only so much inventory out there. People are not selling their properties. Like
Mhm.
people are more aware of real estate being a vehicle to be able to build wealth. People are
Yep.
holding on to more properties. The old days, I don't know what old days, maybe it's 10 years ago,
Mhm.
before social media was more prevalent, there were more people that would, hey, I have to sell this property to
Mhm.
buy the next one. I need the equity to be able to
Yep.
have down payment and then also to qualify for the loan, et cetera. But,
Yeah.
more people are just holding on. And not only that, more people have like a 3% rate or 2.75% rate. So they don't want to sell
Yeah.
either. So
Yep.
it's just an interesting dynamic that we can talk probably hours about. Um,
All of this stuff. Yeah.
so it last thing, I know we're running out of time here.
Mhm.
Last thing. So part of the purpose of this platform is like the age old question, like, well, shit, what would I have told myself 10 years ago? Kind of a thing. And,
Yeah.
one of the things that we always say is, well, hey, you know what? I was out 23, 25, whatever, going to bars, hanging out with my friends, spending money. I was living at my parents' house till I think
Mhm.
26, maybe, so I was doing
Yep.
okay money wise, but I wasn't saving much. It's like, well,
Mhm.
dude, go do all those things, but just take 10% of your paycheck and put it into savings automatically and don't think about it.
Yeah.
But like, then the other part of the equation is like talking about real estate, talking about these things. It's like, well, if I'm telling you this is the path, right? This is possible for you if you just go do it.
Mhm.
Then the question is, well, if does the average 25-year-old, even if they know the formula, even if they know the stuff, are they going
Mhm.
to listen? And I think that's part of the equation too. So,
Yeah.
what are your thoughts on that part of it?
That part, I think, ultimately, especially when it's like the younger 20s and stuff like that, I think a lot of what 20-year-olds tend to do depends largely upon uh, just their circle of friends. I think it comes back to that, the very typical thing of, you're the average of the 5 or 10 people that you most spend your time with. If you're spending with a bunch of people who do not think at all about retirement, they're not planning on budgeting, they're not doing anything that's about saving more than they earn. I think it's going to be really hard to set yourself apart and actually grow in that way. Um, I think that's like honestly the biggest thing is if you can just because there's a lot of young professionals who are serious about building businesses, creating wealth, being smart with their money, and still having a blast. They're still going snowboarding, they're going on cruises, they're doing cool things because they're very proactive about how they spend their money first. And like you said, they're pulling that 10% out first before they go buy their stuff. They're pulling the money out that's needed to meet their goals of investing first. And then if they have extra off the top, then cool. Maybe we'll go to Mexico or maybe we'll buy another investment so we can do even more cool stuff next year. But like they prioritize just the investing and prioritize setting up money. Um, and I think it makes this whole journey so much easier when you're instead excited about all the different steps that you're doing. So I think like if I was to go tell other people in my age range or tell people who are 18 or anything like that, I just say get involved in community, and that's not just your local community, but that's also your social media community. Change out your friends. Stop seeing posts constantly from friends who are just doing stupid stuff with their money. Make friends online on Facebook forums, go to conferences, and then just like be very proactive about who you spend your time with because it really ultimately it affects your mindset and how willing you are to sacrifice and work hard for the things that you ultimately do want. If you just have a bunch of people who are living more so for the now.
Cool. Um, Last thing, where
Mm-hmm.
can everybody find you on social media?
Yeah. So if you want to find me, the main area would be Instagram at Drew_McCluskey. That's MCCLUSKEY. Or you can find me on Twitter at Drew McCluskey RE. Yeah, it's the main two places. If you want to see more about Bright Investor, you can go to brightinvestor.com. We're right now doing kind of like a pre-launch sign up. So there's some free resources on there as well about what to look at when getting a market. And that'll be launching in March. And then you can also find Bright Investor on Instagram at Bright Investor Official.
Cool. So
Yeah.
I'm looking forward to catching more of your journey here in the next few weeks and months. And I guess the last thing I'll say too is like, I love talking about this stuff. And I know you do
Yeah.
too. And like talking about community and social media, like, if you're out there and you're at the end of this episode listening, hour plus in, if you have questions, you know, drop a
Yeah.
DM, drop a comment, whatever.
Yeah.
Don't hesitate to ask questions. Like we love this stuff. So you
Yeah.
know what? If you need help, ask the question. No harm. Worst thing that
Yeah.
happens is no one responds. That's the worst thing that happen.
Yep.
Just respond tomorrow. ask again. No harm in that. You're not going to hurt my feelings, nor Drew's.
Yeah.
So
no, 100%. Like, again, build that community, active networking. It's crucial. So yeah, definitely, feel free to reach out. I'm always game to talk about real estate more and more.
Cool. Well, thanks, Drew. Looking forward to catching up soon, and have a good day.
Yep. You too. Thanks for having me on.
All right. Bye.